with this network. Philip, I mean, Catherine's raised a lot of important issues. We're delving into cross-border CBDCs now, and the connectivity and interoperability between systems. I'd really like to just hear your thoughts first on perhaps compatibility between systems, the traditional, and DLT based. I know this was quite a big emphasis of Helvetia. So just to get your thoughts on the interoperability puzzle within probably the domestic setting first, and then stable coins and DLT based and traditional systems.
Sure, and I think it goes back to something that Bashak said. Basically, I mean, we need to take baby steps. We cannot go all in and make a big bang and just move over to DLT. And that's basically something that we strongly believe. If we move to a more tokenized ecosystem, it will be a development and not a big bang. So there will be times, and probably extended times, where we need to have the traditional world to interoperate with the new DLT world. And that's actually what we looked at Helvetia phase 2. So in phase 1, we actually managed to bring cash on ledger and have wholesale CBDC present. And then the next question we ask is, well, now that's fair enough, and we have a nice GUI where we can see the balances of the different parties involved. But I mean, those balances, they need to be reflected in our core banking system. They need to be reflected in the core banking system of the banks for regulatory reporting and others risk tools they have in place. So it's really about bringing that information back. And one thing that we focused on was really to be minimum invasive all the time and leveraging what is out there. And then, of course, the easy solution there was to rely on message-based information transfer using ISO 20022 to actually bring the information back to the core banking system in a form that core banking system do not need to do much. They get the information as they get it from the RTGS system. It's just simply a different system. And I think the colleagues from SDX did a very good job there to basically translate what's going on the DLT side into what is the representation in a standard format like ISO 20022. And I think that solves already a lot on the domestic level. And I think it also has the potential to basically solve interoperability issues on an international level. If we can agree on standards, I think then we already make a big approach. We probably don't need that one platform where every central bank, every deposits are present, but we need ways to make those systems as interoperable as possible. And I think there we need a lot of collaboration between central banks, but also with the public sector to make that happen.
Certainly, perhaps not this one unified ledger, but a set of interoperable networks. Claudine, Philip has set us up nicely to talk more on cross-border CBDCs and interoperability. So I just wanted to get your thoughts on where you thought this was heading, perhaps some considerations on Project Jura, which I think both of you were involved in. As Philip has already mentioned, interlinking CBDCs cross-border implies common standards, common technical interfaces, numerous problems. So what's your current thinking on that?
Well, our thinking has been evolving, and I have to mention also that we continue work with the SNB, notably with the Mariana project, where we explore cross-border CBDC. I think indeed, and maybe there are some different steps. Of course, you hear a lot at the moment regarding the interlinking of existing fast payment system, because it's one possible avenue for improving cross-border payments and alleviating frictions. And maybe this can be done in a relatively short time. We have seen how challenging it is to have interoperability of our RTGS systems. And so maybe it's a good thing to explore and to experiment on interoperability of CBDCs just at the project or experimentation level to see how this works. And we have seen, notably through the Mariana project, that we can have some different standards, but which can be eventually shared in a common on a common network. So we show that this works. So I think that issue raised by Philip regarding standards is very important. And also one aspect is probably the governance, which is not the simplest issue to tackle. So we have to think it beforehand. And knowing that also technology can help us a lot, because with smart contracts, you can determine, for example, the access which you want to give or the conditions upon you would want a transaction to be achieved. So we have a lot of area to work on. And I would very much agree on the fact that it's probably going to be very difficult, even in the medium term, to have this global platform, but maybe think a bit more about having some regional platforms. And Mariana is really a case where we add on top of these exchanges of CBDCs, we also have this pool of liquidity to facilitate cross-border exchanges and to optimize liquidity. So probably the main risk of the platforms is fragmentation. So important to collectively think about it. And one important aspect is sovereignty. So it's really more collaboration and cooperation, and thought has to be given to what the priorities and the objectives are. So it's a big work program ahead of us.
Yes, lots to cover. I mean, and just so the audience is aware, and for my understanding, the Project Marina is about how we might trade and settle like FX basically in a future tokenized world. That's the main aim. Yeah.
Exactly, and it just has the added feature of so you have domestic, let's say, networks which are controlled by each central bank, and you have an automated market maker which pools the liquidity and which can optimize FX. So it's an added feature, and this AMM comes from the decentralized finance. So it's quite a new feature that's being explored by the central banks. With the SNB, the BIS Innovation Hubs, and also the MAS.
Yeah. Two really hot topics, I think, right now. I mean, Bashak, I'd love to actually get your thoughts on that project briefly, but also the role of the private sector, JP Morgan, like yourself, in helping with this challenge of interoperability cross-border. Where do you sit in, and perhaps also the role of party orgs? I think it's very relevant in this area.
Sure. And to Claudine's point around automated market makers, we've done an experiment as well with Banque de France and MAS around the use of kind of liquidity pools and AMMs, where we were able to kind of explore this concept from DeFi. So I think the interoperability point is definitely there, and I think, as we said, we're not going to get to a unified ledger anytime soon. And I agree with Philip's comment that we will see a world where cash needs to be in multiple venues. So that's a reality. But we also think that commercial bank money and central bank money, there are benefits in having both types of money in a shared ledger environment to support specific use cases. And that's where we see Partior coming in, which really came out of a project Ubin with the MAS a couple of years ago, where the banks came together, JP Morgan and DBS and Temasek funded this platform as a global clearing and settlement platform. And recently Standard Chartered joined as well to start with the commercial bank money as, this is what we can do right now, right? So having a digital Nostro environment on the blockchain for banks to support settlements in multiple currencies, having almost like a correspondent bank environment on DLT. And from there, the concept is sort of evolving into, well, CBDCs can also be issued on this platform. And that's where we could really enable interbank settlements between the settlement banks using CBDCs of multiple jurisdictions, and we can also enable PVP use cases on a cross-border basis. But that's not the only use case for Partior. Partior also supports cross-border payments, and also it can act as a almost like a multi-bank cash concentration structure for corporates as well. So it has multiple use cases, but definitely, wholesale CBDC in conjunction with commercial bank money is also a use case where this shared ledger environment can support, bringing those together and enabling the PVP use cases.
Definitely, and I suppose the fact that it grew out of a central bank, a CBDC project already, it has a huge potential to have central banks, for them to have nodes already on there. So it's a natural progression for Partior.
Yes, yeah, indeed.
And I mean, if I could just try and bridge Catherine's points to yours, we could see a world there where you have Partior and its blockchain network with its banking partners and central banking partners, but then the universal payment channel connecting Partior with another network. Would that be a fair summary, Catherine? Is that where the UPC could fit into all this?
Yeah, certainly would love to try that. haven't really done it, but that's exactly the type of things that makes a lot of sense for being the network of networks to interconnect between all these different ledger systems.
Yeah, I think it's really useful to connect the dots. We have so many private sector initiatives, so many central bank initiatives, and trying to place them in the market is a huge feat. But I think that's a useful overview. I want to bring in, we have a responder actually online as well, Joe Volano, who's Director of Business Development, CBDC at Ripple. Joe, I want to bring you in to add any thoughts you have on the panel and any questions you'd like to put to the panelists.
Yeah, hi, Katie Ann. And just for housekeeping, my camera doesn't seem to be working, so I'm happy to just do the voiceover. Not intending to be rude though by keeping it off. If somebody wants to enable it, please do. The first thing I would say is, I always learn a ton when I watch these OMFIF panels, and today's no exception. I've got a ream full of notes in front of me because this is such a smart discussion from obviously people on the front lines of doing this work. So really well done, and thank you to all the panelists. I'll key in on a couple of things that I took note of and try to connect the dots up to a question that I'd really be curious to hear some conversation on. So first of all, on Project Mariana, that's a fascinating body of work, and it's something Ripple in parallel is exploring, how we can facilitate cross-border, cross-currency transactions using an automated market maker. And one of the things I think Claudine commented on earlier was the idea of pools of liquidity. And I think that's one of the often overlooked elements of this, is having that liquidity in place is really critical to making sure those models function. So that's just one observation I heard earlier. When we think about wholesale CBDC and some of the work Ripple is doing, we have projects happening globally with different central banks. One that I'll highlight is with the Central Bank of Colombia, where we are exploring whether a WCBDC can be used as a credit risk-free settlement asset for government bonds with respect to their high-value payment system. It's a really interesting project, and it typifies the kind of work we're doing and engagements and the conversations we're having with different central banks, all of which vary. But there are some of those common themes. one thing, Katie Ann, that I think you might have brought up was a question around, what are the differences between these different assets in the marketplace, and why do we need them? And I'd like to build on that a little bit and ask a further question: what are the implications of having all of these different assets, not just from like a transacting and a settlement standpoint with respect to the type of the asset, but also from a market structure standpoint. And where I'm heading with this is a comment that I heard last week or the week prior from the ECB, kind of expressing a concern around monopolistic positioning and competition as it relates to the convergence of the public and the private sector here. Fabio Panetta was commenting on PayPal's dollar-denominated stablecoin, and I've got his quote open in front of me, so it's very briefly I'll read it. He said, "While the market entry of big techs and other large payment providers may initially promote innovation, competition could be severely hampered if they attain a monopolistic position, as we've seen in other digital sectors." I'd love to hear from the group, and we've got representation from industry, from government. Is that a real risk? Do you accept the premise that is something that is plausible? If so, how should central banks think about mitigating and managing that risk, so don't end up with walled gardens and monopolistic behaviors that ultimately don't serve the best interest of the consumer?
Yeah, no, very good points there. Philip, would you like to, shall we take that to the concern of competition first, Joe, and then let's go on to your Project Marina question.
I can take a go on it. I mean, that's a very, very complex question you're asking there. I mean, how I can try to answer at least part of it, right? We see, I think it's a good thing that we see a lot of different means of payment evolving, because that's the only way how innovation can really thrive, and to figure out which might be the best option. I think there it really for the public sector to make that lift, and more so on the central bank side, that we make sure that the basic infrastructure, the plumbing, I think, Catherine, you put it nicely, is working properly to actually have innovation built on top of it. And I mean, what we also feel is really important, and I think it's something we should in some sense protect, is really the two-tiered system we currently have. I mean, we have central bank money, and we have commercial solutions out there today already, and I think that's something that is well functioning. And I think that also maybe makes the monopoly question you raised, or the monopoly problem we might face. At least we would have still two forms of money: wholesale, CBDC potentially, and a solution from Google. So I think it's a fair question, and I think I hope we still have enough time to find clever solutions or clever answers to tackle such problems in the future.
Claudine, anything to add? That was I think a very fair summary.
Maybe if I can compliment Philip, I very much agree, of course, with what Philip said. I think it's important indeed to maintain the two-tier model, and to encourage and spur innovation, and also for us central banks to continue experimenting with the private sector, with our commercial banks, and with fintechs as well, because they have a lot of new ideas, and also they know the consumers very well because they're their clients. At the same time, we have to be careful about the potential rise of very big actors in the landscape, and again, well, with financial stability concerned. So the point is really the regulation of such actors, and also ensure that obviously private monies do not take all the landscape, and that we keep a good balance between private and public money. I think it's important to preserve this. Thank you.
Definitely. Catherine, Bashak, if anything to add on, I suppose, the implications of these multiple forms of on-chain money, and wider implications for competition?
I'm happy to kick off this. I think, yes, really like the question coming from Joe, because I do think that competition is very important. And I think, for what it's worth, with all the different forms of digital currency emerging, that in itself is generating competition, because ultimately it's the users who choose, right? Who use the one that makes the most sense for them. And I think in this whole session, we really dive deep into the importance of interoperability, whether that's coming from the infrastructure perspective, or more importantly, coming from the standard, the scheme, and the rules that we can do. But I think just thinking beyond, what else of the important features, I would highlight things such as privacy, resiliency, and scalability are all the super important things to make this entire payment whole. And therefore, I think the role that the private sector can play is ensuring that all these features are being built out and met with satisfaction, and hence, all the range of value-added services, which, as an example, we spend a lot of time and effort to ensure a very resilient system, preventing fraud, because technology is simply getting better on both sides. So, I think statistically over the past 5 years, we dedicated $10 billion+ just trying to prevent on cybersecurity and such. So I think all these things need to be taken into account as we're encouraging the private sector, the sort of competition front. So yeah.
Yeah, I would add that I think echoing the two-tier model which we talked about, and I think I would say that we're not really, when we talk about central bank money and commercial bank money, we're not talking about a different type of asset. It's the same type, but presented on a different technology. So the form changes, but the asset itself is the same. But the emergence of other types of digital monies, privately issued, digital payment coins, introduces potential other risks to the environment, which of course regulation there is important. And we need to make sure financial stability is there. Things like credit disintermediation, etc., is important. But also education in terms of users, right? Understanding of the risk profile of these different instruments is extremely important. And we've seen e-money evolve, right, in different ways. Again, education there has been important as well. When you have your money with an e-money provider, where do you take the risk, and how does it get treated? So I think that's part of the puzzle as well, that we need to kind of make sure education is there for the users as well.
Definitely, and I think we'll see a stronger understanding of governance of stable coins in the coming few months. Joe, thank you for your question. Any final points to add before we move on?
No, I thought, I thoroughly appreciated everybody's thoughts and agree largely with the sentiment. So thank you so much.
Thanks, Joe. Now, Catherine, you raised resilience, which I think is really important, and I would like us to spend just a few minutes on this. You mentioned that there's a lot of work going into it on the private sector side and Visa's side, but I wanted to just actually ask the wider panel of how they're thinking about the effect of a system, and with all these technology changes, what are the wider implications for operational reliability, security, and resilience, which is basically a question on the use of DLT in these wholesale payments, and are they up to the job? What are your current thinking on that? Perhaps if I can go to Claudine first.
Well, indeed, a lot of work to do, I think. Of course, there are new technologies also carry new risks, and we have to assess these. And experimentations is not enough. I think we need to have a deeper dive on this. Payments and payment systems are very sensitive areas for central banks and for governments, because you have to ensure that this works smoothly. For example, just to mention this, there can be some specific laws. And for example, in France, we have the military programming law, which focuses on systems of vital importance. And this can encompass hospitals, payment systems, and such infrastructures. And these are subject to specific requirements. And so, for example, you need to have some certification, some external audit, also some pen test, for example. So if these new technologies are to bring live new systems, they will probably have to abide by some requirements. I think it's very important for the trust, for maintaining the trust. And I know there are some projects going on at the BIS Innovation Hub levels, and indeed resilience is key. And we'll have to ensure that this works before we go live in production of any type of system, in my view.
Philip?
Sorry, my mute button was hidden. I fully agree with Claudine, and I would even go one step further. Maybe, I mean, in today's system, resilience is extremely important. And if we imagine a future where there are more use cases on a platform that more people and also the public rely on, I think then resilience becomes even more important. I mean, just on an experience I had yesterday where I tried to buy a train ticket. Normally I do that via the app. The app wasn't working, and it was not only me now waiting in front of the vending machine to actually get a ticket to ride the train. I think that's really kind of a problem if we have so many use cases, so many different businesses relying on the same platform. Then I think resilience becomes even more important because even an hour of downtime could pose a lot of risks in the whole system.
Certainly. I mean, Bashak, Catherine, have we solved that on the private sector side, do you think?
I think some of the benefits that, obviously DLT brings in terms of, 24/7, etc., also brings this aspect of like, there's no downtime, right? So you can't like say it's the weekend and we can fix things. So it means we need to, act faster, solve faster, fix faster. So there is definitely that. I think, obviously, the existing use cases, most of the existing use cases of DLT are based on, private permissioned chains where, participants have kind of full control of the environment. That helps to, ensure that it's under control, right? And I think, what banks and others, digital asset platforms have done is, apply the usual controls and processes that we've been used to as financial service providers, subject to throughout. This is a new technology, but I think what we've managed to do over the past years we have internal teams that understand this technology, understand working with this technology, and counter any issues and leverage new tools as well to support further efficiency on the platforms.
And like at Visa, what we're really proud of is to say that we're 99.9999% available at all times, and that just takes a lot of effort, right, to ensure that is resilient. And to your question, I don't think it can ever be solved because the challenges are just getting harder as people are getting cleverer of how to attack the system. So it's a matter of we need to continuously to improve on our existing system, and that makes it even more interesting as we're thinking about, say, to support other new emerging rails. There's just unknown risks that we're not familiar with. I would like to add in the fact that for any of these system designs, none of them is sort of single dimension because you want to balance so many different areas, right? And I think, for example, whether we're on a shared or unified ledger, there's then the balance between efficiency, resiliency, but then privacy as well. So all these things, how do you kind of strike that right balance. Maybe it's different country by country, but I think that's going to be a really critical piece when we come to the final design.
Definitely, and it's an excellent point to end on. I just wanted to quickly share with you the poll results. We asked the audience, what's the key catalyst for financial system innovation through wholesale CBDC? We had most people vote for tokenization of financial markets. That's quite in line with what we were saying. 50% on that, 42% on cross-border payments, 33% on limitations around RTGS upgrades, and 25% felt that it was to DLT and blockchain advancements. And then only 8% said the introduction of potential systemic stablecoins, which I thought was quite interesting. So our audience feels like the systemic stablecoin introduction is less of a reason for wholesale CBDC than cross-border payments and tokenization. So for you to think about and take away, but thank you so much, everyone, for your thoughts. I think we've scratched the surface on a lot of issues, but we've really raised a lot of key questions that will be addressed in the next phase of work. Thank you so much, and we look forward to discussing this again within the DMI. And do get in touch with any further questions or thoughts from the panel. We'd love to carry on the conversation. Have a lovely rest of your day.
Thank you so much.
Thank
This was
you.
great.
Bye.
Thank you.
Thanks,
See you guys soon.
Thanks, Catherine. Sorry for the tech thing in the middle. I'm not really sure what happened there, but I'm sure I'll be told.
Hopefully they captured. No, fine.
Everything was recorded, definitely.
Okay.
It's something to do with the live stream. So yeah, everything was recorded.
Great.
But no, it was very good, actually, fascinating. I also wanted to ask, but I didn't ask, was whether wholesale CBDC is synonymous with DLT, because I know we always say that it's, but really it is, actually. At least that's how I feel when you read all the different projects and things, because we're so careful to say, it's about technology, but actually I haven't seen much experimentation with anything but DLT.
Yes, yeah. Well, I mean, Banque de France model is based on DLT, right? But Bundesbank is a trigger chain, so it's not really.
That's a good point.
CBDC,
yeah.
As well as Bank of Italy as well. The model they are putting forward is connecting via DLT model, but the money itself is staying where it is today. So yeah, that's true. There are different models for another discussion.
Yeah, and then you definitely have to invite a colleague from the Bank of England, because I think their argument sometimes is there is actually already wholesale digital currency from a central bank, right? It's the current RTGS system. It's digital, but we normally really, for us it's really synonymous with DLT and the technology advancement. But I think the Bank of England also has a fair point, and I really like the Banca d'Italia and the Bundesbank papers on basically using the digital form of money we have today to interoperate, and that's also something we from the